Tax doesn't build schools, it builds control. You're forced to pay it or face jail time. We've been told that it's all about public service, but it's actually not. It's about making sure that you need their currency and stay trapped within their system. In today's episode, we reveal why tax isn't just a policy, it's a banker's dream and your silent nightmare. Let's get right into it. This episode of The Money Revolution is sponsored by Stokvel Gold, our partner in all purchases of silver and gold. Now, if you want to make a purchase, hit the link in the description below and get in touch with Stokvel Gold. Welcome to another exhilarating episode of The Money Revolution. This is your podcast where we empower one another to build wealth through the sharing of information and ideas about how money really works. And in today's episode, we are discussing tax. We all pay tax, and if you don't, the consequences are severe. We are told taxation is of central importance to modern societies. In fact, they tell us that it is crucial to the government's ability to deliver basic services and to invest in public goods. It sounds noble, right? But if you dig deeper, you'll find a murkier truth. Historically, tax systems were run by governments that used real money, i.e., either gold or silver. So the way that the state could raise capital was through citizens' contributions. Think about it like this. Real money only came from mining either gold or silver, which took a significant amount of time. So, if the government was going to war, for instance, they would raise funds through taxation of their citizens. The earliest forms of tax were your property taxes and trade and import taxes. Now, these taxes were paid by citizens either through coinage or produce. We also had war taxes, and these types of taxes were paid in times of national crises, and they were also paid through either coinage or produce. In other ancient civilizations, we also had tribute taxes. Now, with tribute taxes, collection was made as a contribution towards either the empire or the state at that particular point in history. And I can give an example with when King Goodwill Zwelithini took a royal Swazi wife. Each and every household within the KwaZulu-Natal region contributed one cow towards the dowry for King Goodwill. Now, these taxes were either once off or for a particular project of the state. But in today's world, governments don't use either silver or gold as currency. In fact, they use the paper that they print. So, the natural question to ask is, why can't they just print the paper they need to build us either schools, hospitals, or even the roads that we use in our day-to-day lives? Income tax is a much newer phenomenon. In fact, while taxes have been around since 3000 BC, income tax only became a globally accepted phenomenon in 1799. Now, in order for us to understand the role of income taxes, let's look at what happened in colonial South Africa. Now, after the Anglo-Boer War ended in 1902, colonial employers needed labor. So they introduced poll tax, a cash-only form of taxation. And I think the question that we should ask at this point is, why did they insist on us paying taxes in cash only instead of using either produce or labor or even grain? For this simple reason: to get the cash, citizens had one option: to go into either the plantations or the mines to work for this currency. If you think about it, the goal here wasn't really national revenue. It was about forcing people off of their land so that they could go into the mines and the plantations. So like the poll tax of 1902, which forced people to work for the colonial economy in order to pay these taxes in cash, income tax does something that many of us do not realize. It actually forces each and every one of us to use the national currency, because we need the national currency in order to pay our taxes. I want you guys to consider this. If the government demanded that taxes be paid in grain, would all be forced to go and collect grain so that we can pay our taxes? And if these taxes were payable in beads, again, we would all be forced to go and collect these beads so that we'd be able to pay taxes. But in today's world, taxes are only payable in our national currency, which is paper that is issued by the central bank. So even if you wanted to trade or barter or save in gold, you can't escape the need for fiat currency. Income tax creates a demand for the currency. And why is this demand for currency important? I want us to think about this, so that those who print it can be sure that the people will always need to use it. The second thing that income tax achieves is that the currency circulating amongst the society is eventually paid back to the government as a form of tax, thereby reducing the amount of currency remaining in circulation within the economy. Income tax therefore absorbs and then decreases the currency that is moving around in circulation. By absorbing that currency from the economy, it is essentially helping those who print the money to keep inflation in check. Remember that in episode 4, we said that when the currency in circulation increases, prices of goods and services also increase. And we said that this is essentially inflation. So by having a mechanism that assists in reducing the currency that is in circulation, the possibility of runaway inflation is then reduced. It's like a vacuum cleaner that sucks up all the currency that is being printed by the central government. So the central bank prints currency. Then that creates the prospect of inflation. Then what the government then does is that they tax the public, thereby reducing the amount of currency that is in circulation. And with that, the prospect of runaway inflation. Tax is an inflation management exercise that allows the bank to keep printing more and more and more currency. It's a clever alliance, if you think about it, between the central bank, who are responsible for creating the currency in the first place, and then the government, who then go and tax the public. It's a cycle that is designed to sustain the system of currency, and it's nowhere near liberating you as the citizen. Let's have a look at these 3 charts that tell a story that speaks louder than any theory ever could. They show us three key trends. Firstly, it shows us the total taxes that has been collected by the government over a period of time in South Africa. The second chart shows us the broad currency supply. And the third chart shows us the GDP, also known as the gross domestic product. Now, here's a thought-provoking part. The trend line for revenue closely follows the money supply and not the GDP. Now, think about that for a moment. If taxes were truly tied to the size of the economy and economic activity as a whole, you'd expect taxes to track GDP, which is essentially the value of all the goods and services that is produced by an economy in a particular point in time. But instead, what we see here on this graph is that the more money being printed, the more taxes is being collected, regardless of how productive an economy actually is. Now, how can taxes go up in years where the GDP growth actually went down? It's because taxes track the money supply and not economic activity. Like I said, it's a vacuum that is removing some of the money to prevent the system from overheating with inflation, but leaving you, the hard worker, lighter in your pockets each and every year. And so we have it. The central bank prints the currency, you go and work for it. You get paid in that very same currency, and you pay your taxes again in that very same currency. And the bankers, they get richer from the interest that they charge you. And you get poorer from tax and also from inflation. Thank you for joining us on this exhilarating episode of The Money Revolution. If you found the content that is discussed in this episode, hit the subscribe button and share this episode with someone that you care about. To get notified about our next episode uploads, hit the notification bell below and share your questions with us in the comments section below. Let's wake up the masses. Let's understand how money really works and take back our power one conversation at a time. And remember, if it's paper,